Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is John Feneck of Feneck Consulting. John, welcome back to Kitco.
Thanks, Paul. Great to be here.
Let's start right at the top. Gold's at $4,200 per ounce. Silver's at $54 per ounce, and copper's touching $5 per ounce. John, what's going on? Why are all the metals prices so hot right now, and why do they continue going up?
Well, let's start with gold. Gold obviously was kind of in a sideways pattern for a good portion of 2025. I think that lasted about 4 months. I'm not looking at the chart, but it then broke out of that consolidation, as we say, and just skyrocketed past 3,600 and just went ballistic here. You know, it's breaking out sort of as Bitcoin did in Q4 of last year, right? Bitcoin went from 70,000 or so when Trump was announced in November to over 100,000 real quick. And so these things can move faster than investors are prepared for. If you look at it, it's not just investors, it's bankers, right? Goldman Sachs has now raised their target to 4,900 gold for next year. Bank of America yesterday came out and said, no, we're not at 4,400 anymore. We're at 5,000 gold. I think that's the highest target from any major bank. Very exciting times for gold investors. This is not a contrarian signal. You and I have been talking about this since Q4 of last year when Trump was named, right? Like we said, this is actually positive because these banks have serious power. They have a lot of money behind them. And when they speak, you have to listen. You know, it's not that they're always right. It's just having all of this new attention on gold is really, really bullish. Now let's talk about silver, right? Silver, as you know, is my largest holding. I worked on the silver team at Sprott, and I feel very confident that silver was going to break 50 this year. You and I talked about that on multiple interviews. Conversely, last year, I said it wouldn't break 30, and it didn't. So even though silver was our largest holding all of last year, we still didn't say that silver was going to be a good investment necessarily, that you had to be patient. Right now, you have to get invested. Like 50 broke on silver like butter. That was not expected. I don't care who says what. I mean, I wasn't expecting that, right? Like that was crazy to watch. And now we're pushing 54 as we record this. Look, there's no resistance at this point, right? We're at an all-time high. I don't know where it goes from here, but clearly you're going to retest. Well, I shouldn't say retest. You're going to test the 66 to 70 range, I think, by next year very easily, which would imply that you have to buy some silver mining exposure through equities right now. And if you look at SILJ, SIL, SLVP, all of the three major ETFs in the silver equity space, all doing extremely well this week, that's another signal that, you know, this is game on. Copper at $5. Look, copper's had a crazy year, much driven by the Trump narrative. I think copper at $5 is still undervalued. There's just, you know, that spike in copper price that you saw to the high fives, low sixes was real. That just shows you there's no supply out there. So really, really good stuff for the commodities complex in 2025.
Now, John, it's interesting you say that in silver we're in uncharted territory, and to a certain extent that's true. The last time silver was at $50 per ounce, that was, 15 or so years ago. Inflation adjusted, that would be a $60 to $70 price point, which is what you mentioned. Is that perhaps the new sort of psychological level for silver, getting back to an inflation adjusted all-time high?
Yeah, you and I just interviewed at Beaver Creek and we talked about that. And I said it was probably more like 67 to 70 is sort of our range. I think I just said 66, but it doesn't matter. 66, 67, it's going higher, right? And it needs to get to that inflation adjusted level. And I think that would be an easy target for next year, given that we just broke the all-time high with no resistance. Like, don't forget, 50 held on multiple weeks, like, you know, going back to 1980. This isn't like a small resistance level. So the fact that we broke through there, I mean, I've read some articles even on your own website that were saying we wouldn't break 50, right? Like a lot of people were betting against silver here and they're wrong.
Okay, now, one of the big drivers for gold this year has been the buying from central banks, but that seems to now be diversifying. Global gold ETFs recorded their biggest month ever in September, with inflows hitting a record 17 billion US dollars, according to the World Gold Council. At the end of September, global gold ETF total assets under management of 472 billion US dollars, as gold holdings rose by about 3,800 tons, just shy of the 3,900 ton peak recorded in the first week of November 2020. John, it seems that more investors are turning to gold. Western investors as well, which is perhaps a new part to this. Are investors coming in for insurance, for speculation? Are they just following the herd, or something else?
It's really a combination, Paul. I mean, gold has value that now is being realized by a lot of investors, definitely on the larger side as well, because they've seen Druckenmiller and Dalio and a bunch of guys that they respect talking up this gold narrative for a number of years now, and they're finally getting on board with it, right? Maybe buying a little late in the game, but maybe not, right? I mean, if you look at BofA yesterday saying 5,000 from 4,400, you're not late here at 4,200, right? You still have a long way to go. But what that means for gold equities is just insane. People need to be buying gold equities through ETFs or individual names. We, coach clients on this all the time in terms of value-oriented gold stocks. As of September 30th, we just put out our numbers in our holdings. We had 55% of our portfolio in gold-related stocks. We're literally at 1% or so gold. We're much overweight on the equity side because you're seeing outsized numbers, on a daily or weekly basis in some of these names now.
Let's move into talking about companies. We're starting to see more and more transactions and movements there. Barrick Mining is to sell its Tongon gold mine and exploration properties in Côte d'Ivoire to Atlantic Group for up to $305 million, including $192 million in cash and contingent payments based on the price of gold. Tongon produced 148,000 ounces of gold last year. Also in Africa, China's Chengtung Mining is to buy Loncor Gold for 261 million Canadian dollars in cash, with a 33% premium there, to obtain 4 million ounces at the Adumbi deposit in the Democratic Republic of Congo. John, M&A action in Africa. Is this perhaps geopolitical alignment from Western companies towards Asian companies? Is this risk management again, or is this something else?
Africa always carries higher risk, from an investor's perspective. But what we see at Feneck Consulting is that there's different parts of that country that you have to do your due diligence on. Like Mali, a couple of years ago, if you talk to Clive Johnson over at BTG, he was pounding the table that, hey, we're good in Mali. Mali's like Fekola mine in Mali is going to be our prime driver for revs. Well, they've had a lot of problems with Mali last year and this year, right? But you aptly pointed out at $4, I remember when we interviewed, that now at 580, that this stock was way undervalued in your view, because that only represented 15 to 20% of their entire revs, and we own that stock. But Mali still carries risk, and Barrick has had troubles there too, right? So I think what the market is missing is that when these things get resolved, like they did with Peru when Castillo got jailed, right? Like that's your all-in moment to go into Peruvian stocks when a dictator gets removed and thrown into jail. It's like you're going to see the same thing in parts of Africa from time to time when you have political unrest, and you have to do your homework, make the calls to CEOs, get a better sense for, is this permanent or is this like a 6 or 12 month thing? If it's a short-term item, then you have to buy when things get resolved. Our favorite jurisdiction in Africa is Botswana. We think Botswana, when you look at global jurisdictions, ranks top 10, top 12, and I get pushback on that a lot, but, there just haven't been any issues there. So we own some stocks in Botswana for that very reason. It's like we don't mind as value managers taking some risk when it's calculated risk.
Now, the Barrick's unfortunate incidents in Mali are supposed to have been the reason that Barrick Mining let go Mark Bristow, according to stories in the Globe and Mail. Barrick has seen its mine suspended there, and a handful of its executives are under arrest. An arrest warrant is still out for Mark Bristow. John, When are we likely to see the M&A action really move into North America, into Canada and the US?
I think we're seeing it already. I mean, we're just not seeing the kind of deals that you and I as investors would like, right? I mean, if I'm in a stock that I'm taking massive risk in as a junior gold or silver stock, I am not happy with a 20 or 25 or 30% premium at all, not in this market. I want to see companies hold their asset with both hands and say, hey, Mr. Major Barrick or Newmont or Agnico, pay up. Like, this is not going to be something where we give this up cheaply. On the Feneck Commodities report, which is the show that Don Durrett, my partner, and I host on for the last couple of years, we talk about this, Paul, in almost every one of our interviews. We ask a CEO directly, how much of your shares are in good hands, right? And we don't beat around the bush. Like, if it's not 30% or higher, we're not very interested in the stock because you can easily get that company taken over. We're not interested in takeovers for 20 to 30% premiums. Now, if someone is operating something which they don't have the ability to build, right? We both know stocks like this, and they're handed 100% premium, sure. I mean, like that's reasonable, right? But these majors and mid-tiers, they need the juniors. They do. And that's why I coach these clients all the time in the smaller and micro cap sector, 4,000 plus gold. You're not selling for a 20% premium, or else we'll just never work with you again. Like that's just not what we want to see from CEOs.
Okay, now G Mining Ventures secured commitments for about $400 million of financing package to build its Oka West gold project in Guyana. That could increase to more than $500 million. It also executed a $38 million equipment loan agreement with Komatsu. G Mining is looking to produce 350,000 ounces for more than 12 years at Oka West, following an initial capital cost of about $972 million. G Mining is one of a handful of growing mid-tier gold companies. John, it seems to be a great environment for growing mid-tier gold companies. High gold prices means they can finance relatively cheaply. They can finance with relatively little dilution. The high gold price hasn't touched everybody equally, so there's valuation discrepancies, which these guys seem to be very adept at looking to exploit and take advantage of.
Yeah, I agree. They've had a good track record, and we don't own them at the moment, but it's something we track. There's just so many names out there, Paul, in the sector. However, I agree with you 100%. Not only gold, but silver development companies look so attractive right now. Don Durrett and I talk about this all the time on our show. In fact, we've had a lot of developers on for that very reason, because when you're nearer term production, right, you're in a much better position than if you're just exploring with the idea that you're going to go into production 6-7 years down the road. We have no idea what prices look like in 7 years. We definitely have an idea of what they'll look like in the next 1 to 2 years. To give you one example in each, Next Gold just announced a financing, NXGCF in the States, NEXG in Canada. I think that financing got announced yesterday. We bought more at the open yesterday because, we knew there's going to be selling pressure. But you have to see the long term with some of these gold names, Paul. 7 million ounces of gold in the ground with 2 different projects, one of which we think is going to get permitted here quickly. I don't see that as a risky play. We bought it under $1 yesterday. So the other one in the silver space, I just had dinner with in Stockholm. I spoke at a conference there, and Michael Williams and I met, who you've met. He's the founder of Aftermath, AAGFF, AAG in Canada. And as a development silver play, these guys are coming out, they've been telegraphing for weeks, like, we're coming out with our MRE in the fourth quarter. Like, do you think it's really going to shrink with all the drilling they've done? Like, they're going to come out with more resources, right? How is that negative in a bull market? Yet the stock is getting smoked here. I mean, it hit like a high of around 74, 75 US. It's trading at 57 cents right now. I mean, it really got smoked in the last couple of weeks. And I think that's just a warrant overhang. You have to do so much work in this business, as you know, Paul. Like, you have to look at, okay, if this company did a financing, you have to count 4 months and a day from then. There's going to be some selling pressure, right? With warrants, it's something else you have to look out for, because as a company has too many warrants on the register, then there's constant selling pressure as people exercise those warrants, right? I think Aftermath is really going to clean up their book after this round. So, again, is this a long-term problem or a short-term problem. We see it as short-term.
Okay, well, let's turn to red gold, to copper. Glencore is to get a government bailout in Australia of up to 400 million US dollars to keep its Mount Isa copper smelter and Townsville refinery in Queensland open for the next 3 years. This highlights the tough market conditions for Western smelters. John, if US President Donald Trump wants to convert more copper concentrates into copper, does he need to do something similar to perhaps bring back the Hayden smelter in Arizona back into production, or to help beef up the two other smelters in Arizona that are already in production?
Yeah, that's a great question. I don't know what the plans are there. I do know that Trump is much more focused than he was in his first term on mining, and that started with his EO in March, his doubling down in April, and then the announcement that you and I discussed on our last interview, where around August 13th he gave about $1 billion towards critical minerals in the U.S. That's just the tip of the iceberg. There's going to be so many announcements like that over the next number of months. So yes, I mean, Trump wants to create jobs in the U.S. He wants to keep copper here. He wants to keep critical minerals here. You can see this from the numerous press releases over the last couple of months, right? So I think that betting on a state like Arizona is a bullish idea. I'm biased. I live here. But this is the kind of state that people want to do business in. Nevada is another one. Idaho is another one that's growing. I have investments in Wyoming. There are some states that are more challenging, right? Like you can't just say, "Oh yeah, I want to mine in California." In some counties, you'll never get anything built there, right? So you have to use a rifle approach in certain states.
Now, the conditions for copper and the support that the Trump administration plus high prices is also causing, apparently, BHP to review and revisit its mothballed copper operations in Arizona, potentially looking at how it could restart those there. Now, Teck Resources cut its guidance for two copper mines, which reduced its copper guidance this year from 415 to 465,000 tons, down from 470 to 525,000 tons. And this comes as it prepares to merge with Anglo American. Anglo American said it fully understands and remains fully supportive of the merger to create Anglo Teck. John, this seems to be perhaps a little bit embarrassing for Anglo American, coming so soon as it does after the Anglo Teck merger was announced. Does this perhaps raise some questions over the extent and depth of its due diligence process, that it didn't pick up on these issues?
It could be. It could be that they just saw that as more of a risky proposition within the book of assets, and they just said, "Look, we're in a bull market, and we're going to be able to appreciate out of this." You never know. They're both extremely large companies with a lot of moving parts.
Okay, now there aren't really that many growth opportunities in the copper space in terms of mergers and acquisitions, large projects. So, is there perhaps an element to this of keep calm and carry on?
Yeah, absolutely. There's still copper out there. I mean, Barron's, gosh, I guess two and 3/4 years ago, their January edition, I remember, was the front cover was copper. It shocked me because, like, for Barron's to pick up a story like that when things weren't really in rally mode was pretty interesting to me. And I read the article, and it's always stuck with me since then. It said, the average copper mine will come on, like, if it's already moving forward, it'll take like another 7 to 10 years from that article to get them into production, which is still like another 4 to 5 years from now. Like there's no fast tracking going on in certain parts of the world. Trump is starting to do that, as you know, with certain parts of the U.S., but it's not across the board move. I mean, we just, anytime we see disruption, right? Like we saw in Vietnam this week that they had trouble at the mine, their major tungsten project. Well, the tungsten stocks just rallied huge over the last 72 hours as a result. And guess what? They're 4% of production, right? Like this isn't like 20% of global production. It's just that there isn't any. So, certain metals are just more attractive to us. We have an overweight in tungsten versus copper right now, just because it is more critical in our view and in terms of the near term.
Okay, we're going to get onto critical minerals in just a moment, but one closing point on copper. One company that is looking to be the next deposit to come into production, and that's McEwen Copper. They announced a feasibility study for their Los Azules copper project in San Juan, Argentina, looking to produce about 150,000 tons per year of copper cathode for 21 years. The project will yield an after-tax internal rate of return of about 20%, 3.9-year payback, initial capital investment of about $3.2 billion. The company aims to commence construction next year and be able to deliver first copper in 2030. Now, John, this is obviously a real positive for the copper sector and for Argentina. You've already touched on this during our conversation. How badly does the world need projects like Los Azules?
Oh, badly. I mean, we are happy that McEwen has had the run that they've had. A lot of that is that narrative around Los Azules, and it's good to see that that's moving forward. Argentina is an interesting one right now, however, because you've got questions about leadership there, and the current regime has been so positive for mining. Let's see how they get through the next few weeks. But I think that could be a buying opportunity too. You've got Peru coming up, I believe in December 31st, somewhere around there. They've got their elections. Some of this is speculation. You have to kind of talk to people that live in Argentina, live in Peru, get an idea for what they think is going to happen with government, changes, and make investments accordingly. There's risk, right? I mean, that's the name of the game. This is not the sector for someone who's risk averse.
Now, with the copper price at $5 per pound, is there the possibility, you think, that McEwen could finance Los Azules into production using partners and what have you, without actually having to do the long anticipated IPO, initial public offering of McEwen Copper?
I don't know. I don't talk to Rob that much. I don't talk to the company that much. I have no idea what their plans are. They haven't had the best history of non-dilutive stuff, right? So we sold a portion of our position here recently as a result.
Okay, now you mentioned about the sort of broader situation in Argentina. US President Donald Trump continues to loan money to Argentina to support the Argentine peso, but he said it will stop if Argentine President Javier Milei loses heavily in the midterm elections. John, is Milei's economic miracle in Argentina potentially unraveling? And also, is President Trump perhaps meddling in Argentina's internal affairs?
I wouldn't put anything past Donald Trump, so that'll answer that part of the question. As far as what's going to happen there, like I just referenced, I mean, we'll see what happens, right? I mean, I follow quite a few projects in Argentina that have gotten new life with this regime. So there's risk, right? Like if they don't have that same kind of support, there is risk, of course. But, as value managers, we're still finding so many projects in countries like Argentina or Peru that are way undervalued, that have historically, if you look back decades, just been producing a ton of minerals. So I think we're moving towards a world, Paul, whether it's good or bad, that more and more people are looking inwardly to their own resources, right? You can see this with Trump since March. I think more and more countries are going to say, how can we be self-sufficient? And, I think that's bullish for our sector because our sector is so under-owned. When you add up all of the mining companies that we talked about today, when you add up all of the literal thousands of others that we haven't talked about today, the market cap total of that is under $650 billion, I believe. And when you look at the market cap of NVIDIA or like the trading volume of NVIDIA in 2 business days, it's more than that, right? On certain days. So our sector is literally well under 1% of ownership in the global markets, where something like tech in the S&P is about 45% as of August 31st. So again, our time is coming. When you start seeing some new fund flows into our sector, you can remember that you heard it here on Kitco, because it is going to happen. I can see it in certain names already.
Okay, now we can't have John Feneck on the show without having a deeper dive into critical minerals, so let's get to that now. Tensions between the US and China are rising again ahead of an expected meeting with President Trump and President Xi in South Korea later this month, as China implemented new export controls on critical minerals and related technology. Trump responded by slapping another 100% on import tariffs against Chinese products, raising them to about 130%. Despite rare earths being critical in defense applications, ranging from jet aircraft to missiles, Ed Conway of Sky News in the UK highlighted how these events would likely increase the cost of your earbuds. John, when you read about this growing spat between the US and China, were you worried about your next earbud purchase, or were you worried about something else?
Not worried about anything about earbuds or anything in technology. I was more watching what the price action was doing in the S&P, the Russell, and the NASDAQ after Trump said that, right? We saw a pretty nice sell-off in those three. The tickers are SPY for S&P, IWM for Russell, and QQQ for the NASDAQ. Go look at that performance, right? And then look at what happened the following Monday when Trump said, hey, you know what? We're going to work things out with China. Everything started to rally again. That's wishful thinking. China-U.S. relations right now, I wouldn't call them broken, but they're not good at all. And I don't think this situation gets fixed as easily as people think.
Okay, now looking at the share prices of a lot of critical resource stocks, critical minerals resource stocks, we're not only talking about 300%, triple-digit year-on-year gains. Some companies have had 4-digit year-on-year gains, 1,000%. Some are even 5-digit. I think the highest one I've picked up on is 12,000% year-on-year. There's such a drive behind critical mineral stocks at the moment, John. Does this have a danger of sort of topping out, or is this going to continue?
There's definite danger in buying anything that's up 1,000+%, year to date or 12 months or whatever. I mean, because you should have been buying a position way long ago, right? If you're chasing something, that's called momentum investing. That's something we don't do. Now, we will hold something that continues to appreciate if we continue to check the thesis and the thesis remains intact, right? Two areas, I just mentioned tungsten. So two areas that I'll mention again: Guardian Metal Resources, GMTLF in the States, GMET.L in London. They don't have a Canadian ticker. This is a stock that we started to purchase in Q4 of 2023, under 20 cents, right? So now it's trading at $1.80. Look, we haven't sold anything except for when they announced the $21 million financing about 3-4 months ago, because I didn't know what that would do to the stock, and it did very little. And that just shows you that a big financing like that on a small stock didn't even move it down much. I mean, that's really bullish price action. American Tungsten is another one. You and I have talked about that before. TUNGF in the States, TUNG in Canada. Their new CEO, Ali, is pretty sharp. We've talked a number of times at my conferences in Florida, and we just saw each other in Beaver Creek. Ali's got a plan for that company, and they're in Idaho. So Guardians in Nevada, American Tungsten in Idaho, great jurisdictions, and they're moving forward on their projects. And, chasing something like that makes sense to us in the sense that it's not too late to buy these stocks, right? American Tungsten just announced a big, not a big financing, but $10 million, right? So the stock sold off on that announcement. That's when you buy these things, right? You're not going to get like super cheap prices if you look at a 2 or 3 year chart, because there is no tungsten globally. It's massively produced in China. We just got done saying that China's not playing ball with the US, right? So where is this stuff coming from? And that was kind of what our thought process was in 2023, Paul. Let's find really well-run micro caps or small caps in metals like tungsten, antimony. There's another one that I invested in called iMetal, IMRFF in the States, IMR in Canada, and they just picked up an antimony project in Europe for dirt price, like really good price. So it's like Don Durrett and I interviewed Paul Hewitt from USAS, and he was talking about how antimony was a penalty on their balance sheet for many, many years, and as of January 1st next year, that's actually going to be contributing to their revs. So, I don't think people understand the critical space very much. It's extremely hard to follow sometimes. But that's why you need to partner with people like us or someone else, right, in the sector that is doing this literally every day and will help you try to get a piece of that, upside.
Now, I interviewed Paul Hewitt of America's Gold and Silver yesterday. That video is
Okay.
available on our YouTube. We talk a lot about antimony and also copper and other things that the company is looking to do. John, a lot of the critical minerals narrative with China is very much focused on sort of, let's say, geopolitical aspects, national security aspects, for not having the supply of the minerals that China either mines itself or processes. But these minerals are quite scarce, and so China faces supply constraints as well. And so one could argue that some of its export restrictions are to maintain its resources to service its own industries. In that context, is it perhaps unreasonable of the West to demand these things of China if it faces shortages of its own?
Oh, gosh, that's a great question. I mean, I'll have to be a little PC on this one. I mean, I just don't think that the U.S. has done a good job through many, many years when they had opportunities to, buy into projects in the critical space, and now they're panicking, right? And it is what it is. I mean, as investors, you have to look at this and say, how has the narrative changed since Trump has come into office? Well, that March EO was what, 2 months into his tenure. It's like this guy is not playing. He's not playing around. He's saying, we realize we have a problem. We're going to fix the problem. Yet it remains to be seen how we're going to fix it completely, because China is so dominant in many of these, critical minerals. So look, I mean, this is what makes for good, drama TV. Insert word here. But when you look at it from like a perspective of what do I do with my money, you have to buy something in the sector, right? I mean, like there's so much opportunity here. This isn't a flash in the pan like we saw with lithium like a couple of years ago, where we had a lot of pumpers out there talking up something and the supply was actually much higher than people were talking about. There is no supply of certain critical minerals. There just isn't. And then you couple into the fact that you have a lot of private companies or companies that just trade on the London or just trade in Canada with no U.S. ticker yet, which is crazy to me. And what do you do? Like, there's not 30 tungsten stocks you can buy as a U.S. investor. There's a handful, and I just named two of them for you: in Guardian and in American Tungsten. Right? Like these are opportunities that you have to say, wow, I could buy 2,000 different gold stocks, but I can only buy 20 of this type of metal. Right? Like that's an opportunity when prices go up as they have, and I think that trend is going to continue.
Now, you mentioned that a few short weeks into Trump's second terms, he started taking action. He's taking this very seriously. You mentioned some of the executive orders. The US administration has also been writing a lot of checks. And this week, the last couple of days, US Treasury Secretary Scott Bessent said that the administration is looking at providing price floors for a number of different minerals and commodities, although he didn't say what. What are your thoughts on some of the actions the US government has been taking to try and close this gap, this vulnerability?
I'm very happy that we're seeing the action, Paul. It's way too late. I mean, there has to be a lot more money thrown at this. This is like we talked about with that August 13th release, $1 billion, really? Like that's not going to do it. It's not even close. We're just so far behind. I could go down a list. I don't want to bore people, but it ranges from 65% Chinese production to 91% Chinese production in some of the minerals we just talked about, right? Like antimony, tungsten, et cetera. So when you have a country producing 2/3 or nearly 100% of something, how are you narrowing the gap exactly? I'd love to, get on a debate with someone like that, right? Like, how are you really, show me the game plan for the next 12 months, please. I want to see how much money is being spent, because I don't think that's going to be nearly enough.
Okay, well, at least money is starting to be spent. Now, this week, New York-based zinc producer Titan Mining received interest from US Export-Import Bank of the United States for $120 million US financing. for the construction of its Kilbourne natural flake graphite project in New York. Titan plans to build a 40,000 ton per year commercial natural flake graphite facility and become the sole US producer of graphite. Why is this important? China is restricting graphite exports too, and graphite is the largest part by weight of the lithium-ion battery anode. John, this would seem to be a good deal as well, but let's close by looking ahead to your conferences next year. Conferences in Washington, D.C. and in Fort Lauderdale. To what extent or not will critical minerals be part of your agenda and part of the content offering you're making at those events?
Yeah, sure. I deliberately did Washington, D.C. this year because of the push in critical minerals. I think a lot of CEOs that could attend something like that could have not only the ability to meet high net worth people from surrounding areas like Philly and New York City, but also you're going to be able to meet your constituents in DC literally a mile down the road, right? Like that's good use of your time as an executive. So we hope that people, not only in critical, but also other parts of the commodities complex, gold, silver, copper, oil, we'll look at those conferences. So Washington, D.C. is May 17th through the 19th. And then Fort Lauderdale at the Four Seasons is going to be May 20th through the 22nd. D.C. is our second, run there. That's where I spent a lot of my years as an executive. So I feel confident that I'll be able to bring a lot of investors to that event that typically wouldn't go to an event, right? I coached a lot of financial advisors for 25 years in that region. I actually had my office in DC. So I plan to bring a lot of people there to a mining conference that maybe have never attended one before. I know how life-changing it was for me to go to Beaver Creek for the first time in 2019. It was, I always say to my clients, that was like a life-changing moment for me financially, where I was able to meet with 25 or 30 people that do this for a living and really get to know the in and outs of the sector.
Excellent. Well, I look forward to seeing you there, but we'll be seeing you before then, several times, hopefully, on Digging Deep. That's it for just this week. John Feneck, thank you very much for joining me again.
Thanks again, Paul.
And of course, to our viewers, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.